accumulated depreciation. So the opening balance and closing balance of both the item is given in the question. The opening balance of machine is 40,000 and 50,000 is the closing balance. To balance CD 40,000 and to buy balance CD 50,000. Actually, it will be buy balance to balance BD 40,000, buy balance CD 50,000. Now, accumulated depreciation 10,000, 12,000. So the opening balance in accumulated depreciation is on the credit side. So buy balance BD 10,000 and to balance. Okay, Fahim, you have solved these type of question. Can you tell me what we will do in this question now with the given information? Question number 1.
Of the question number 1, sir?
Yes, the machinery account and accumulated depreciation account.
During the, so 1 minute.
Yes. Actually, the additional information, and we have to calculate the sale or purchase of machinery during the year.
So we have to make like a depreciation account also, right?
Yes, I have prepared it. You can see I have prepared 2 accounts.
And a machinery account also.
Yes, machinery account and accumulated depreciation account.
Yes.
Okay. So after writing the opening and closing balance, what we do now?
Sir, the depreciation during the year.
Okay. Depreciation
On the credit side, we'll write the amount.
Depreciation on machinery.
Yeah, depreciation on machinery.
Charged during the year amounted to ₹6,000.
So we'll write by profit and loss account on the credit side of the depreciation account.
On the credit side of depreciation account.
Yeah, 6,000.
Okay. So there is no depreciation account here. It is accumulated depreciation.
Yeah, accumulated depreciation account. So we'll write that
here by profit and loss.
Yeah, by profit and loss account, and amount is 6,000.
Okay, that is not the correct solution. Okay, Ritika, do you remember how we have prepared the accumulated depreciation account? Yes, Ritika.
So will the machinery account be written in the debit side of the accumulated depreciation account?
Okay, actually the depreciation charged, we will calculate it. It is not given in the question, depreciation for the year. It is given in relation to the sold machine. Okay, the machine was sold for how much amount? 10 machine costing rupees 10,000 was sold at a loss of 2,000. Okay, and depreciation on machinery during the year amounted to 6,000. Depreciation on machinery, it is given. Okay, so it will be written here by depreciation account, not profit and loss, by depreciation account 6,000. 6,000. Okay, there is no other balance here. So we will calculate the balance. It is 16,000 here. It is 16,000 here. So 4,000 is transferred to machinery account. This is your balance which is transferred to machinery account. So generally these two things, the amount transferred to machinery assets account and the depreciation charge during the year. These two can be calculated through this account. Okay. So opening balance, closing balance was given. So we can calculate any of these two information, and one will be generally given in the question. So we will calculate the other one. Now this is transferred to machinery account. So we will write it here by accumulated depreciation account 4,000. Now, if the machine was costing at 10,000 and we have charged total depreciation on that machine 4,000, then how much balance we have?
So 6,000.
6,000. And we have sold this machine at a loss of 2,000. Means at which price?
So 4,000.
4,000. Very good. So it will be by bank account 4,000. And here it will be by profit and loss account, because there is a loss of 2,000. So now you can see here that the total on the credit side is 60,000 and total on the debit side is 40,000. So we will write it here to cash account purchase 20,000. Is this clear?
Yes, sir.
Yes.
Okay, actually the problem here is when we prepare only machinery account, not accumulated depreciation. This is a method for charging depreciation, accounting for depreciation. So one option is to charge depreciation in directly assets account. Means you will write depreciation on the credit side of machinery account and it will reduce the value of machinery every year. This is one method. The second is you charge depreciation in provision for depreciation account or accumulated depreciation account. This one. So this is second method we are following in this question. So we have charged depreciation for the current year in accumulated depreciation account, and the asset that we have sold during the year, the total depreciation on that machine or on that asset will be transferred from accumulated depreciation account to machinery account. Okay. So
Okay, sir.
in the question, it is given that machine value was 10,000, but the depreciation charged on this machine, we don't know. So that's why we have calculated this amount. Okay.
Okay, sir.
Okay. So we have calculated this and the total depreciation on that machine was 4,000. So we have transferred it from accumulated because the asset we are going to sell it. So why to keep the balance of depreciation related to that asset? We don't have to maintain the depreciation for that asset. Yes. So that's why we have transferred the total accumulated depreciation on that asset to the asset account. And then we have calculated the profit and loss. Like 4,000 was depreciation and 4,000 at 4,000 we have sold the asset and 2,000 is loss. Tell me, do you have any doubt here? Okay then. So now we will start cash flow from operating activities. Cash flow from operating activities. Now, this is very important because how much you have practiced this, it does not matter. If you don't understand the concept or there is any area that you have forgot in this operating activities, then you will not be able to solve the cash flow statement. This is very important because the financing activities, the investing activities is easy compared to this because If you understood the concept, you forget the any line, then you will easily get when you read the question, because you will know that which one is financing, which one is operating, but you will not know things here because you have to find out from the question. It is not given in the question directly. You have to uh, get the information from the question. It is, you can say, hidden in the question. So you have to get it out, and then you have to solve the question. That's why this is very important part in cash flow statement. Now, first of all, uh, operating activities means the main revenue generating activities which are main revenue generating activities is called operating activities. Okay, so we know the what are these operating activities now? Inflow and outflow. Okay, do you know one thing that in this part there is two methods to prepare the cash flow from operating activities. Anyone know?
What, sir?
Do you know that we have two methods for preparation of cash flow from operating activities to calculate operating activities cash flow?
No, sir.
Okay, Ritika. Okay, actually, I have told you this in one of our previous class. So if you don't remember, no problem. I will repeat this again. Actually, yes, inflow. Now, what are the inflow under operating activities? So first of all, cash sale, not credit sale because it is not in cash. So cash sale, cash received from debtors, there are other income which is treated as operating activities like royalty, and then fees, commission, like these things, and refund of income tax. And these are income. And in outflow, it is cash purchase, then payment to creditors, payment to operating expenses, payment of operating expenses. For example, it is salary, rent, wages, etc. And payment of income tax. So these are inflow and outflow. Please write this. After that, we will talk about the methods. Please tell me when you have completed.
Done, sir.
Okay, Hakirat.
Yes, sir.
Fahim. Okay, now the format. Okay, so the format is same as we have prepared the format of investing and financing activities. So okay, here it is. The two methods that I was talking about is a direct method and indirect method. Now, this direct method is not in your syllabus. We have to discuss only indirect method, but I will tell you some little about this direct method so that you understand the concept. What is this direct and indirect? Now, actually, when we prepare statement of profit and loss, uh, you have all seen the format of the statement of profit and loss. Yes. And before this, you have also prepared the trading and profit and loss. So in both of these, we calculate profit from sales. Profit from sales. Yes. So the method is first we know the sale, then we deduct the expenses from it, and then we get the profit. So now in cash flow statement, we do all this, but we only consider the cash item, not any credit item, not a item in which cash is not coming or going. So we remove the non-cash item from the process, and then we calculate cash flow by this method. Means sale minus expenses minus then we get profit. So this is called direct method. So when we follow the same process, the process for calculation of profit, then it is direct method. Now in indirect method, we calculate the same thing, but in reverse manner. Means first we know the profit, then from the profit we go to cash flow. Okay, so we go in reverse manner, not from sale to profit, we go profit to cash flow. So that's why it is called indirect method. It is clear to you now?
Yes, sir.
Yes.
So now we will discuss indirect method, because direct method is not in your syllabus. So we will discuss only. Okay. So in indirect method, there is a very important thing here. Cash flow from operating items. Now, the first item that we use here is net profit before tax and extraordinary items. So, how to calculate that? You remember the format, Fahim?
Yes, sir.
Okay, can you tell me?
Sir, first, the opening balance and the closing balance.
Okay. Actually, let me copy the format first.
Net profit for the year. It's like particulars and amount. One amount column, one particulars column.
Yes, the starting point in this format is
Net profit for the year.
just one minute. Yes, here it is. In operating activities, the starting point is net profit before tax and extraordinary items.
Yes.
This is our amount, and we have to calculate this. In some of the question, it may be given, but in most of the question, you have to calculate this amount. So, how we will calculate this?
Opening minus closing.
Yes. So either the question will give you the profit as per statement of profit and loss.
Okay.
If a statement of profit and loss is given, then current year profit will be given. So you don't need to calculate opening minus closing. Okay. Or the second method is closing balance of statement of profit and loss. minus opening balance of the statement of profit and loss. So this is your current year balance, means you have earned this profit in current year. Now you will add some item here or deduct some item. So add or less. Now which item will be added here is the non-cash item, or which is required, which is deducted after calculation of profit. Okay, like if we transfer to reserve, if you transfer any amount to reserve, then is there any cash flow here?
Transfer to
Because
reserve.
yes,
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 sir. We'll add the amount, right?
yes, we will add. That's why I have written here, add transfer to reserve.
Yeah.
So why it is added? This is the most important question here. Why it is added? Do you know the reason?
Sir, all the reserves are added in in this.
But why?
I don't know, sir.
Okay. So actually, when you transfer to reserve, when we prepare the profit and loss account, let's say this is your net profit for the current year. Yes. So this profit is transferred to reserve, either in general reserve or in any other reserve. So you transfer some of the balance here to reserve, or you keep the balance in the statement of profit and loss. So if there is any increase in general reserve, then it is due to transfer to reserve from the statement of profit and loss. So that's why this reserve is just a transfer from one account to other account. It is not going out from the business. Yes or no?
Yes, sir. It's like in the business only.
Yes, it's in the business. Like if you are transferring from one bank account to another bank account of yours. So in that case, no cash is going from the business. So it is not a cash outflow. If it is deducted from the profit, then we should add it to remove the impact. Okay. So that's why it is added, transfer to reserve. So when we have deducted in the beginning, let's say when we calculate net profit, then it is deducted in a statement of profit and loss minus transfer to reserve, like this. So now we are adding it. Why we are adding it? Because we have to remove the impact. We have to eliminate the effect of transfer to reserve. So minus then plus, so it will automatically no effect on the profit. Yes. Yes or no?
Yes, sir.
Sir, can you explain again?
Okay. Yes. Okay. Let me show you the format of a statement of profit and loss first. Then it will be easy for you to understand. Have you seen the format of a statement of profit and loss? We have discussed in our class. Yes or no? Tell me. I'm not seeing any format here. Okay. Uh, I will show you the format once I have found it. Okay, so the format is when we calculate profit, so it is net profit before tax. Okay, and this profit is then distributed like in minus tax, then we get net profit after tax. And after that, we transfer to reserve and dividend paid. Like these things are done after we calculate the profit. So for cash flow statement, we need this. Okay.
Okay, sir.
In cash flow statement, we need this to start our preparation. So any item which is added or deducted should be eliminated first to get this. Okay. Let's say you have this balance after deducting all these things. This is deducted. You have deducted this also and this one also. So after that, you get this amount. Okay. So now you have to go from here to net profit before tax. So what we have to do, these items are deducted first. So now we will add it. Yes or no?
Yes, sir.
So that's why we will add all the items which is deducted before from the net profit before tax. So
Okay,
that's
okay.
why you can see here I am adding the transfer to reserve because it is deducted here. Transfer to reserve is deducted here. Dividend paid is deducted here, and tax is also deducted here. So that's why we are adding transfer to reserve. Tell me, is this clear?
Okay, sir.
Ritika?
Yes, sir, it is.
Fahim?
Yes, sir.
Actually, you have studied this. You told me that you have completed this part, but uh, that's why I asked you. So I thought you know this.
Sir, I know the format.
Not only format, the reason behind it.
Oh, yeah, that.
Yes, transfer to reserve is added. Now the dividend. Okay, so dividend, when we pay dividend, dividend is of two types, interim dividend and final dividend. So if we have paid interim dividend, then we will consider the interim dividend of current year because it is paid during the year. So that's why interim dividend of current year is assumed to be paid. And if the final dividend is given, final dividend, then it means it is proposed dividend of previous year. Or you can say the declared dividend, not proposed, declared dividend of previous year. Because when, let's say, understand the process of dividend, when we calculate our profit in current year, what we do is to propose that we will pay this much dividend. And it is cleared by the shareholder. It is approved by the shareholder in July, August, September, like this. Okay. And they approve the dividend. After that, it is paid. So the dividend of previous year, that is the year ending at March, will be paid in the next year in September or October, like this. Okay. So that's why final dividend is paid in the next year always. So proposed dividend or declared dividend of previous year will be paid in the current year. That's why final dividend paid is considered here because it is proposed dividend of previous year. Is it clear?
Yes, sir.
Okay. Now, provision for tax. Provision for tax. The current year. And if there is any refund of income tax, then it will be deducted because refund of income tax is treated as a so refund of income tax. It will be deducted here. So this is any extraordinary expenses and extraordinary income. Is there anything else left in the format, Fahim?
Uh, Sir, the ins-
Yes, yes,
refund is done, right?
yes, refund of income tax here.
No, sir.
Done.
Yes.
Okay, so this is our format to calculate net profit before extraordinary items, and this item will be deducted here, and you will get net profit before tax and extraordinary items. Please copy this.
Done, sir.
Okay, so now we'll discuss the format part. You have completed, Kirat, Fahim?
Sir, can you wait for 1 minute?
Yes, sir.
Okay.
Okay, done.
Okay, so I'm sharing a question with you now. From the following information, question number 8. From the following information, calculate net profit before tax and extraordinary items. Surplus of that is balance in a statement of profit and loss, opening and closing. Both are given. Dividend paid in the current year, interim dividend. So whatever we have written in the format is given here. So this is our things. Like first item is will be closing item. This one 3,36,000. It will be written first. And actually, as per the format, the first item will be 3,36,000. And from the closing balance of the statement of profit and loss, we will deduct the opening balance. So we will get 2,36,000. Now, there are some items which is to be added. That is dividend paid in the current year, interim dividend transfer to reserve provision for this, and there is loss due to earthquake. These all items will be added. So 72,000 will be added here, and 90,000, then 1 lakh, and 1,50,000. After that, 2 lakh. So these items will be added here because these are dividend paid current year, because it is proposed dividend of previous year, interim dividend paid, and transfer to reserve, provision for tax, loss due to earthquake. Now, refund of tax is 3,000, and it is 1 lakh. So 1,03,000 will be deducted, and all these items will be added here. So 2 lakh, 1, 3, 4, 4,50,000, 540, 6 lakh, 12,000. So 6 to 8, 8 lakh 48,000 minus 1 lakh 3,000, so 7 lakh 45,000. So this is your profit or loss before tax and extraordinary items. Okay, so this is actually only two question and everything is as per the format. So I have not solved in proper manner. I have just explained things to you. So is it clear to you, or should I prepare in the proper format?
No, sir, it is clear.
Okay. Kirat?
Yes, sir.
So this is a very basic question. After that, our cash flow from operating activities starts. After that, we have to prepare the format of cash flow from operating
Okay.
activities.
Okay.
Okay. Now, in cash flow from operating activities, if okay. First of all, from this net profit before tax and extraordinary items, we have to add or deduct any non-cash or non-operating items. Now, what is non-cash and non-operating items? You have to understand that. So, non-cash and non-operating. Both of these will be added or deducted. Okay, because this is already adjusted from the profit, so we have to eliminate the effect. Like non-cash depreciation. Depreciation is non-cash item. Means if you charge depreciation, then it will only decrease the value of asset. There is no cash going out. Yes.
Yes, sir.
Okay. Any provision made? So you have seen that provision for tax is added. So any provision made, like provision for doubtful debts. This is also non-cash items. So every item like this is already deducted from the profit because we have calculated profit after deducting these items. So these items will be added now. Okay.
Okay, sir.
And in the same manner, non-operating means item which is to be included in financing or investing activities will be eliminated from the profit. So financing, like interest paid, it is included in profit. So it will be eliminated, like rent received, interest received, dividend received, like these things will be eliminated. So these are non-cash and non-operating items. Okay, so we have to consider only cash item and from the operating activities. Okay, so we'll discuss the balance part in the next class. If you have any doubt, you can ask questions.